Yeah, that's right. 48 trillions of dollars of our money just vanished, are gone. Where to exactly, you ask? Well, to some of the major banks out there. Not only US banks, but also international banks, you know? These were secret repo loans made out by the Federal Reserve to some of the major banks out there like JP Morgan, Deutsche Bank, and Barclays that were in trouble. You know, they were in financial trouble. And you know what is the worst part? The worst part is that they did everything they could to silence these loans, to keep them secret, you know. When these loans were made, there was some news going out there just explaining what was happening, and those news after a while just disappeared. And now there's no articles almost that you can find anywhere, you know. How does blockchain can help with this situation, you know, because first of all, blockchain can help with transparency. You don't need to trust. You can verify on the chain the transactions that are made. And the fact being such a big entity, you could quickly see that they were transferring those kinds of funds, you know. So there was no point in censoring news because everyone could see what was happening. Secondly, with blockchain, you have a capped supply of tokens. So there's no one central entity like the Federal Reserve that could print more tokens just to give out loans and to basically create an unfair advantage to these banks that just get money out of nowhere. Blockchain with a good governance and decentralization will just assure that everything in the protocol is fair, that the rules are the same for all the users, and guarantees that no one gets an unfair advantage. You know, an unfair advantage like, I don't know, getting trillions of dollars out of nowhere, or better said, out of our money, out of our purchasing power. So guys, please remember that nothing in this video is financial advice, just informational content. Okay, and in this case, that's exactly it. We want to inform you about a situation that happened related to our financial system, and that is important for all of us to know, and that has been eclipsed or almost hidden away from the public. I don't think that's good in terms of, you know, educating people, you know, of making people aware of the reality of the things that are happening in the world right now. So that's why we came out with this news. Okay, well, with that out of the way, let's go to it. Basically, the Fed has issued some secret ripple loans to some of the mega bank corporations, not only in the US but at an international level, from the end of 2019 to 2020. You know, and summing up all the amounts sent to these banks, you have around 48 trillion of dollars in stealth funding, I would say, because it was all very secretive, you know. But yeah, as we can see here, you know, this was in late 2019 to 2020. Um, it was it was discovered by investigative journalists Pam and Russ Martins, and we have their article, so we'll show it afterwards because it's very interesting. And yeah, totaling of crazy 48 trillion of dollars in Repo loans. But of course, probably right now you're asking yourself, what is a Repo loan? You know, I asked that question as well, and fortunately, our dear friend Investopedia will clarify it. No, no, this is not a sponsored video at all, but who knows, maybe one day Investopedia will want to sponsor this channel. We will be excited, you know, because it's a very useful website. But yeah, coming here to Investopedia, you know, we have here Repo that is basically a repurchase agreement. Okay, those were repurchase agreement loans, and these are short-term loans. You know, they are usually backed by government securities, and they imply a promise to buy this government security later in term after you get the money. You know, but the great thing about these loans is they are usually given out to banks that are having liquidity issues. Okay, so basically that's what we know, that these banks were probably having some serious liquidity issues, and the Fed had to intervene. Okay, and they had to intervene even before the major health situation that we had that should not be mentioned. but that everyone knows about for sure. Even before that, because it was late to 2019, they were intervening in the repo market because basically the banks were in trouble. Basically the banks were in trouble, and the Fed, once again with our money, had to bring more money and intervene in the economy. And on one end, this major health situation was just the perfect excuse to ramp up money supply in a crazy way. So yeah, that's something to consider. And the worst part is that it's suspected that they had to intervene due to risky derivatives. As we can see here, let's take a look at this article. This is the original article, research article by the investigative journalists. Okay, they show here also very important for us to see some of the borrowing that was done and by which banks. So here we can see that, for example, Barclays had 2 trillions just, and this is just from January 2020 to March 2020. So you have even other loans outside this period. We have also Citigroup, Goldman Sachs, JP Morgan, and banks like BP Paribas. So they have nothing to do with, I mean, they have something to do because they have assets there, but they are not American banks. And yeah, everyone was struggling at the COVID time, and these banks were getting trillions out of this. And the worst part is that it is suspected that all this money was due these banks, these mega banks, engaging in the risky derivatives. Risky derivatives were the same thing that Warren Buffett calls weapons of mass financial destruction, and were the things that led to the big crisis in 2008, as we can see here. And yeah, to stop that from happening, the Fed had to again step up and lend out more money to these kind of institutions, because overall there are lots of problems with the repo market, and unfortunately, if there is not this, if there was not this kind of activities from the Fed, this kind of initiative from the Fed, it's likely those repo loans could have went down, because as we can see here, the repo loans are, even invisible recognized, that are highly connected with the financial aid, 2008 financial crisis. Okay, and it's also something that, for example, is suspected that has helped Lehman Brothers hide its decline in terms of assets because they were getting this liquidity and showing it as assets. And after that, after this crisis, there were some rules, okay, and some legislation to decrease the amount of money in terms of the repo loans market. And they had some success, but you know looking at these numbers, they said that at the time in 2008, the repo loan market at around 4 trillion. Right now, we have at least 48 trillion, as you could see. So a bit scary. I don't think those legislations really help that much. And yeah, there's still, as you can see here, a systemic risk to the repo market space. And a major default by a repo dealer can inspire a fire sale and just crash the entire market. And in fact, that crisis that the the yield curve has been predicting might well be thanks to the repo market. If you want to know what crisis I'm talking about, I'll leave a video up there for you to learn more about what is the yield curve and how it has helped us predict all the major crashes in the last few years. Okay, guys. So it's a very interesting video for learning purposes and also to guide our market, our trading strategies, I would say. But it's very interesting to see this. And of course, repo loans are risky loans, okay? And the largest risk, as is pointed out by Investopedia itself, is that the seller, the person contracting the loan, fails to hold up to its end, and doesn't pay back the loan by repurchasing the securities. And that's in fact very likely. And if that happens, it's just the Fed will be losing that money. We, in some ways we'll be losing that money completely, and yeah, and it's all something that affects every one of us, unfortunately. And um and basically the Fed will out the loss for the risky behaviors these kind of companies, these kind of banks have been having throughout the years. And we don't think it's fair, especially when the Fed is printing money, taking out our purchasing power, because there's more money in circulation, so our money is worth less to fund these banks to just keep engaging on risky behavior. Um, but why do I say they are taking risky behavior and reckless behavior? Because if you think about it, what are banks? How do banks make money? Basically, banks make money out of interest rate. Out of how much they can make, how much they gain in percentage from the money we have. That's why they have a lot of incentives to lend our money, and the more they lend, the more they get, and the higher the interest rate they can charge. And you usually can charge higher interest rate for riskier loans and riskier financial products, the more money they make. Okay, and for shareholders, what matters is to make money. And so the bank, they don't have any funds there. It's not their funds, it's our funds that we put money in the bank, and then they reuse it as much as they can to make out the maximum yield possible. And yeah, at the end of the day, sometimes they engage in products and loans and activities that are too risky, and when they go bad, they need help and they need bailouts. And if there's no bailouts, we are the ones that are losing our money because it's lost already. And it's really bad because you bail out, you're just giving, delaying a problem, because you're printing more money to give out to these banks so they can pay the people that have money there. But as you do that, you're just removing purchasing power and creating inflation for everyone. So people are worse off and are still paying in a different way. And the more we do that, the more we'll have to pay later when the banks fail. And that's really, really worrying, I would say, at least in my hand. Okay, and in fact, I think we are taking a similar path to the situation we had in the 2008 crisis. Okay, guys, but let's imagine, okay, uh, that instead of having like money, we would have a cryptocurrency like ADA or Bitcoin. Okay, let's see how cryptocurrency would help fix this problem, and why we just so desperately like need crypto, because crypto will actually be a great financial improvement to the system we have right now. And I'll make the arguments very simple, and you can tell me in the comments if you agree or not. I would love to create a healthy discussion about this, so don't forget to tell me in the comments. But before going that and going further, of course, right now we have this major crisis with inflation, that is also thanks to these kind of loans, and people are suffering with the increase in yields. In fact, many will probably lose their homes because they cannot pay, and it's a very unfortunate situation that is caused by the activities of these banks. And we are the ones paying, and holding and bearing all the costs at the end of the day. In fact, a lot of people are just, praying for the Fed to pivot as soon as possible. But in that regard, it might, like the Fed pivot might not come as the blessing people are expecting. In fact, it can be the opposite. It can be something that will signalize that the markets will go further down. Okay, guys, and there will be further economic issues that we all have to suffer. And in fact, that's something I shared with you in a video that I'll leave up there above, that what will happen, what is likely to happen considering the situation we are in this time, and considering previous data and economic analysis, what is likely to happen when the Fed pivots. Okay, guys, so that's a very useful video if you're interested in economics, if you have money, or even if you're an investor. So that's a video you should definitely watch. But coming back to this, let's imagine we have a cryptocurrency like Ether or Bitcoin. First, the first thing is that the Fed would not be able to print more crypto. Okay, the supply of these cryptocurrencies is fixed, it's capped. There's a limit. For Bitcoin is 21 million, for it is like 65 billion or 40 billion. Yeah, 40 billion. Sorry, and you know if you want more, you need to work for it. You need to help validate the blockchain. You cannot just randomly get more of these cryptocurrencies out of nowhere. So the Fed will be very limited in terms of lending their money, because they would have to think really hard on who they would lend the money to. In fact, it would be impossible, because 48 trillion is more than the supply, the capped supply of any of these projects. So first, 48 trillion would be impossible to lend. But if we had, for example, an equivalent amount of value expressed in these cryptocurrencies, they would be very careful with whom they would lend to, because they would want to get their money back for sure. Because if they didn't, they would go bankrupt, and yeah, there wouldn't be nobody there to save them, because nobody could create money to save them. So that would be a very big risk, but that would help banks and also the Fed to be more aware of their decision, more responsible for their decisions, because there's no way back. Okay. Secondly, another thing we would have with these cryptocurrencies is that we could verify everything. We could follow the blockchain and verify what kind of transactions were being made. And in this case, we could verify that the Fed did this kind of loans to this kind of entities. But more than that, more than just being impossible to keep the loans under secret, the actual thing that will be easier is for the Fed to understand the kind of transactions the banks were involved in, and the general public, and see whether they were riskier or not. Okay, and then take decisions on which banks better suit their needs, better suit their risk profile. And that I think would make the market much fairer, because we would know what they are doing with our money, because at the end of the day, it's our money. Okay. Third and foremost, basically, because we have a limited supply, we have no centralized entity that control the blockchain. If we have a good governance system, the rules are the same for everyone. Okay, and no one has an unfair advantage. No one will be given money out of nowhere. The money you'll get will always be by your work, by the value you create. And if you are not creating value, you will eventually just fail, just disappear, just run out of money. And if you are creating value as a company, for example, you'll just keep growing, and the good companies that create value will stay here. And there won't be companies that are just moved through money, through investors, through whatever kind of loans they are getting. So I think that would also be very good to make the market fairer. In fact, in that kind of situation, it would be much harder to have a monopoly. And this is very different from what we have now, where basically there are institutions that have special licenses to invest that we normal people cannot have them as accredited financial investors, for example. Some companies even have special laws, special taxations, and even in terms of their relationship with banks, they can do transfers and operations that we cannot. Very fast indeed, because they are important clients for the bank, and that's of course unfair. While in cryptocurrency, everyone has access to the same capabilities, to the same rules, and everyone has access to DeFi. For example, everyone can have their bank account. So I think that's very nice, and the best part is no one can inflate the currency and take away our purchasing power. So we are better able to sustain, generate, grow wealth over the years, and that's, I think, is much more positive to what we have right now. Okay, I know this might be far-fetched for some people, but in fact, I do believe cryptocurrency has all the characteristics to revolutionize the financial industry and to help us all have a fairer, more transparent life. I would say, right now. So it will be something that can really allow individuals to have the same rights, to have the same opportunities, because everyone is on an equal playing field. No one has special rules, special investments, special access to special products. No, everyone can access everything through DeFi and the apps. Everyone can stake their cryptocurrency, everyone can move cryptocurrency to different wallets, and that will be like a bank account. We wouldn't have so much unbanked people. So I do think cryptocurrency could help that. I don't think it's interesting for the people that are now extremely powerful and benefit from this system of money printing, but I think it would be fairer for us in general. And it's important that we have average people know this, and that we know this. And once we know this, that we try to fight, we try to, you know, gather around together to push something that is positive and it is for the greater good. Okay, guys, but on my side, what do you think? I'm interested in knowing what you think about this subject. Also, like, have you heard about the secret Fed loans before? Probably you didn't, but if you did, great. Just tell me the channel you're following in the comments or wherever you find this information. But if you didn't, and if you enjoyed this content, don't forget to subscribe and please leave a like. I would appreciate that. It would be important to get this information to more people. And finally, of course, I'd love to have your opinion about these Fed loans down below in the comments, and also opinion about cryptocurrency. Do you think it would be an improvement to the actual system we have right now? I do, but I'd love to discuss it with you. Even if you don't, please, all opinions are welcome. And of course, if there is any other topic you'd like me to discuss, don't forget to leave it in the comments below. I hope to see you in the next video, and take care, guys.